Welcome to the U.S. Family Office Realestate.com podcast with your host, DJ Van Kuren. Each podcast is about real estate-related topics specifically for family offices. Now your host, DJ Van Kuren.
Right. So Antonio, why don't you tell me a little bit about your family's history, and because you're located down in Puerto Rico, right?
Right.
So tell me a little bit of the origin, the industry where the wealth was created, and a little background.
Okay, perfect. So my family history comes basically from Spain. From Spain, most of the family members and friends migrated to Cuba. So I would say that the more recent history or more current history comes from Cuba. From my great-grandfather. From there, he migrated to Puerto Rico, where he moved into the south part of the island called Ponce. And there, he started his own company. He became an engineer, mechanical engineer. By that time, when he was in Puerto Rico, it was in the early 1900s. You had all the sugar canes were the major industries in Puerto Rico. So basically, most of the sugar plantations needed the big machinery equipment to produce the sugar. And those are the mills. So my grandfather founded a foundry to produce and manufacture some of the major pieces of equipment for those mills to function and to work. So he did created that foundry and produced most of those parts. And with that, he started all that business as well with his sons, which were 4 of them. And then one of them was my grandfather, which is Luis Ferre, and he's the one that became governor of Puerto Rico. So that was in 1968. So by that time, when he was governor of Puerto Rico, or he became governor of Puerto Rico, my family owned basically a cement company in Puerto Rico. It did own also a carton or paper company as well in Puerto Rico. And then it had operations of cement as well in Miami. And then a glass operation in Venezuela. And those were kind of the major assets. Then when my father was elected governor, he had a newspaper, a small newspaper in the south of the island called El Dia. So he sold that newspaper to my father. So my father bought that newspaper from my grandfather, and then he decided to move that newspaper from the south part of the island in Ponce to the north part of the island, San Juan. So while my grandfather was governor, my father was managing this new newspaper that then he changed the name, called El Nuevo Dia, the New Day in English. And he was also president of Puerto Rican Cement as well during that time. So that was early 1970s. And then after that, he started growing the newspaper business while he was running the cement company with my grandfather. So the cement company became public in 1963. So it was the first public corporation in Puerto Rico. So he ran the company as well as the newspaper. After the 1980s, early 80s, my father, the newspaper kept growing and growing. So by the end of the 80s, he decided to step down to running the daily operations of the cement plant and the cement factory, and then moved more of his time towards the newspaper, El Nuevo Dia. And from there, he started basically putting most of his time and diversifying the family from that part, from the newspaper. So that was in the early 1990s, and then that's when this next generation came in. So that's my generation. So we are third generation. And from that time, then we decided to invest in other areas and diversify a little bit away from media. And that's where we entered into other businesses as real estate, customer engagement, and then also we moved more towards the database management and web management. So basically, with the third generation, it came more of diversification part, but most of the wealth was created between my grandfather and my father, and from there, then we, as a third generation, tried to diversify the wealth away. This is kind of a very short story.
So when did your grandfather move to Puerto Rico initially?
My grandfather was born in Puerto Rico. This was my great-grandfather.
Great-grandfather, okay.
Yeah, my great-grandfather moved to Puerto Rico close to 1898.
Wow.
Yeah. So,
but it was your grandfather that really started the family wealth. Yeah,
I would say it was between my great-grandfather and my grandfather, both of them. Generational shift kind of created most of the wealth, and this is a learning experience as well. This branch of the family, as well. What happens is that they created all this wealth, but there was no succession planning during that time, and most of the siblings from that generation, from my grandfather's side, they didn't plan well the manage of the family wealth, so it kind of broke into pieces. So different uncles decided to keep some of the different assets. So one group stayed with the cement plant and the cement facilities in Miami or in Florida. The other one stayed with the cartons. The other one stayed with the glass manufacturing. So my direct family side stayed with, this was my grandfather, my father, with the cement in Puerto Rico. So most of the wealth was kind of disappeared from those events following that segregation of those assets. And then my father and my grandfather started creating the wealth again, basically.
So you mentioned yourself being a third generation. Would you more so, if you include your great-grandfather, that would make you fourth, right?
Right. That would make us fourth. Yeah.
Right. So did they own any of the real estate for the cement company?
Yes, they did. They did.
And
go ahead.
Go ahead. No, please.
No, they did own the real estate, and this real estate was created because we had two operations in Puerto Rico, one in Ponce and one in San Juan. So once you had the quarries where you had to get all the material out to produce the cement, then you had pieces of land that you can develop. So in the south part of the island where we had the cement plant, after the quarry was depleted, then it became an industrial real estate play for the family. So that's how we started getting into real estate.
And so would you say that would be the second or third gen, or would it be more of your generation?
No, that would be the second gen.
Okay.
Yeah.
And then did you guys start acquiring any other real estate outside of the real estate that was related to the quarries and whatnot when your generation started to take over, or was that starting to happen beforehand?
No, we started acquiring other real estate with my father and our generation. So a lot of that real estate was acquired through El Nuevo Dia, the newspaper. So we acquired many industrial areas, and those we developed those.
Got it. So those were industrial properties.
Industrial properties, and for example, the property that we have now here, which is City View Plaza, our office building. This one at one time was part of the quarry.
Okay.
And this one, we then purchased the land and purchased more land that we needed, and then decided to start getting into the real estate in the office space as well.
Got it. And was that just in Puerto Rico or outside of Puerto Rico?
No, that was just in Puerto Rico.
Okay. And now how many of current family members are involved in the family business?
Right now, we are 5, the 5 siblings.
5. Yep.
And
you're heading up the real estate, right?
Correct. I'm heading up the real estate at this time.
So, what made you decide to really start building out the real estate portfolio within the last year? Really, is when you started to say, okay, we're going to create an entity and we're going to go out and build this business. Correct?
Yes, but more on that is that we decided to get into real estate outside Puerto Rico. We had it before in Puerto Rico, but outside Puerto Rico about 8 years ago. And that was the thinking behind that was that we knew that Puerto Rico was entering into a recession, and we needed to diversify risk away from Puerto Rico. So as a family, we got together and said, well, what are the expertise that we have that we can export outside Puerto Rico, and we can leverage that expertise, and that our wealth is still safe, but you can diversify a little bit more. So that's why we decided to diversify into the U.S. and then start investing in the U.S. in real estate, in multifamily housing.
Okay, so you started into multifamily about 8 years ago then in the United States?
Yes, correct.
Okay, and was that as the general partner or primarily as a limited partner or a combination of both?
It started as a combination of both, more into the limited partner arena. Mm-hmm. But once we started learning more, and our executive that we hired, or not that we decided to use here, started learning more, then we moved more into the general partner arena.
So how long did it take for you guys to go from, being a little bit of both to the LP to decide to say, okay, we're ready to really dive in as the general partner?
Probably took us about 3 years to do that. As we kind of once we felt comfortable understanding the dynamics. Then we moved to the general partner, and then we started small into buying just one property where we're going to be just the general partner, and from there, then we start buying others. Once we have learned after that small property that we bought at the beginning.
So where were you buying the properties in the States?
We were buying the properties in Columbus, Ohio, and in Indianapolis, Indiana.
So what made you choose Columbus? I mean, of all the places to go from Puerto Rico to go to Indianapolis and Columbus, what made you choose those markets?
Well, ironically, as always, there is always a connection. So we had a couple of friends that were doing business in Columbus, and they introduced us this group of property managers in Columbus. That they say, well, guys, you should look at this. This could be a nice place where you can invest. So through these friends, we decided to go and visit this group in Columbus. We did our due diligence, and from there we started investing in Columbus. And also, before that, we had done a matrix of where the things that we're going to be looking for in our investments. And in that matrix, we decided that they have to be secondary or tertiary markets. We were not going to go into the gateway markets. It should be markets that have good facilities as airports, communication terminals, transportation hubs, should have good medical system hospitals nearby, and as well as job growth and employment growth. So we did our due diligence as well, looking into these markets. So when we started basically getting into Columbus, it was like 1 year before the recession for the U.S. So that was in 2006.
So, and did you do all internal due diligence, or did you utilize some third-party due diligence in that process?
No, we used that for that process at the beginning, internal intelligence, and also we used the facilities and resources of the future partners in Columbus and Indianapolis. So they helped us a lot in that process at the beginning.
Got you. Now, do you still own properties in Columbus and Indianapolis?
Yes, we have. We have 2 properties in Indianapolis, 2 properties in Columbus, and 2 properties in Indianapolis.
I would imagine that they've done quite well.
Yeah, they have done very well. Actually, we sold. We had 4 properties in Columbus, 5 properties in Columbus, and we sold 3 of them last year.
Got it. And were these sizes? But what was the size of the assets when you started buying these assets? Were they between $5 and $20 million, or $1 million and $10 million? What were the size range?
Yeah. The first one that we bought it was between $5 to $10 million.
Yep.
And then after that, we kept buying more between the 15 to 20 million.
Uh-huh.
So these were assets about the size of I would say between 250 units to 300 units, no more than that. Although we had a larger property was about 35 million, so that was about 600 units.
And so you were acting as the GP and the major investor in these properties, correct?
Correct. Yeah. We actually, what happened is when in 2 of those properties we were LPs. And then we approached the rest of the investor, and then we bought them out and became GPs.
Got it. So now, in the last, within the last 6 to 8 months or so, you've decided to sort of take the business to the next level, correct?
Correct. Yes.
So tell me a little bit about that thought process and what made you come to that idea, and the steps that you went through.
Okay. So we have to think again about Puerto Rico, looking at its economic situation, and Puerto Rico has been in a recession for the past 12 years. So just looking into that, we said, well, growth in Puerto Rico is going to be very difficult. So then that's kind of what pushed us to decide to invest more and grow then the portfolio more rapidly into the U.S. And the thinking again was to diversify the risk, but now we felt more comfortable with what we have learned. So our most logical step was to open a new office outside Puerto Rico, from there in the U.S., then manage the assets that we have bought and that we'll continue to buy. Of course, as everyone knows, the last year, so we had the hurricane in Puerto Rico, so that has also changed a lot of the dynamics here about the investment and how people look into Puerto Rico to invest. So for us, it was important to then accelerate the process So we can, as a family company, so we can diversify the wealth so the next generation has another area where they can come in and also participate, and not only in the media part.
So now you're obviously, leading this charge for the family. Did you decide to use another family member in order to be local in the U.S. and to start helping to build out the portfolio, or did you actively look for, a professional to help with the development of this strategy?
Of course, we decided to go and find a professional help that will support the family strategy. I think that we as a family, as always, have done that. We always have find that it's very important to work with managers that have that experience. So in our case, in real estate, we had the experience more in Puerto Rico, not in the U.S., and if we were going to grow the portfolio more quickly, then we needed somebody that will help us to do that. So that's why we hired an external manager. This is not a family member. And we hired that person, and we hired two other persons as well to support their roles and functions for us to grow the portfolio. So we decided to consolidate everything under one group. So now what we have created is called Kingbird Properties. So the Kingbird Properties is based in Boston, but all the assets, all the real estate assets are now under that group. So now we have Puerto Rico assets, we have the U.S. assets, and then we have the South American assets. So those three buckets are under Kingbird Properties. And this external manager and non-family member with these other associates manage the portfolio with the family, with me, one of the family members.
So is this group managing then the properties in those three different areas? When you said it was Puerto Rico, the U.S., and where was the third again?
Yeah, what happens is we have a group in Puerto Rico. So we have a management group in Puerto Rico that manages the asset in Puerto Rico. We have this group that I mentioned manages the assets, and when I mean manages the assets in the U.S. are the ones that look at investment, do all the due diligence, all that has to be done. And then this group in the U.S., then we go into partnership with property managers. So we don't manage the asset directly. We partner with other local property managers, and they manage the asset for us. And then we have...
But I mean, is the group in Boston also managing the assets in Puerto Rico and Spain, I think you said?
No, South America and Chile.
Okay. Yeah.
So in Chile, we have that's a very small investment in student housing. So we manage that from here from Puerto Rico with a partner in Chile, in Santiago.
Got it. Okay. So at what time have you started, as you build your portfolio, how big are you looking to build this portfolio with Kingbird Properties?
We're trying to build a portfolio within the next 5 years to reach about 5,000 units. And then in terms of value, to reach around the $500 million value, and then 5,000 units.
Is your strategy to use only family money, or are you starting to allow friends and family to co-invest?
Yes, our strategy again is to focus on workforce housing, on secondary and tertiary markets, and with that we'll use our own family capital. But then we are inviting other families and friends. But too, we are inviting other family offices and other high net worth individuals. So we can then be more efficient on how we use our capital, so we can buy more assets as we have more partners. So our strategy has focused from the beginning by being by only ourselves, and now more into raising capital with other family offices and other high net worth individuals that want to participate with us.
Now, do you plan, and what's your strategy for these assets when you start bringing in other families? Are you looking to buy and hold for a very, very long time? Are you looking to buy, do a value add, and sell? What's the strategy for the assets themselves?
Okay, so the strategy for the assets themselves is for us, it's going to be value add strategy. So we'll buy the assets that are between the 1970s, 1980s. Try to, of course, improve those assets in those selected markets and other markets, increase the value of the assets, and then whoever invests with us, our strategy is not going to be the flip-flop strategy that we try to immediately do the value add and then immediately sell it after we do the value add. On the contrary, we'll do the value add, and we'll keep the property for a longer period of time. So we'll go probably 1 or 2 or 3 cycles with the property. So we'll try to refinance at some point and then return the capital to the investors. And if they want to stay with us, they can stay and keep benefiting from the cash-on-cash distribution that we'll distribute every year for each of the properties that we buy. We are not going to do a fund. So this is not a fund at this moment. We're going to do deal by deal, specific, and bring investor to each specific deal.
Now, how do you plan on structuring with the family? Are you charging, obviously there's a cost to run the business. Yeah. And there's a cost to identify the properties, and there's a cost to manage the properties themselves. So how do you plan on working with other families from a cost perspective? Will you charge a promote of some sort, or is it a true 50-50? Or, what's your plan for that?
Our plan for that is that we're going to charge, of course, some percentage, what we would call an incentive performance fee.
Yep.
Basically. And that will probably we'll put together all the different type of fees that many other groups do. We'll try to put it in one fee, if possible. That's something that we're working right now, and we're presenting as we speak to a new group that is going to invest with us, and try not to overfee. We want to be sure that we are competitive, and we want to be very transparent on the fee terms, because I know this is something that is sometimes delicate between family offices, and
right.
Have the most transparency as possible on the fees. And and we are very open. This is an open discussion. We are very flexible, and each deal will dictate also the fees and how those fees are going to be managed as well. But we at this time we're calling them the incentive performance fee.
Got it. What was I going to say? So it's really focused on these secondary, tertiary markets, Class B buildings, should we say, multifamily, workforce housing, with a value add that you can refinance out and then hold for the cash flow long term.
Correct.
That pretty much sums up.
Yep.
So, got you. And where are you targeting from a future assets?
We are. You mean markets?
Yes.
Okay. So we're still targeting Columbus and Indianapolis, because we actually know them very well now. So we feel very comfortable with those two markets. But also we're targeting markets in Florida, close to which are not Miami or Orlando. They're more to the north of Florida and the Panhandle. So we're focusing in that market. We're focusing North Carolina and South Carolina because we had invested there already, and we have sold some of the properties as well. And then the other markets that we are focusing is, which is a larger market, but still, I will say it's not a gateway market. We have found some good opportunities, is in Austin, Texas. So that's the other market that we're right now. So basically, it's kind of the middle part of the U.S. You want to look at it that way, a little bit more middle and a little bit south.
Got it. I was going to ask, what was that? Something else. I'm trying to think. I lost my train of thought here for a second. Oh, have you ever thought, as in the U.S., parts of the growing demographics are Hispanic of nature, from various parts of the world. Have you thought about targeting any of these multifamily properties toward the Hispanic population, or is it just strictly workforce and that's going to be a mixture of whomever?
I think that's a very good question. That's a conversation that actually we're having right now. But at this moment, I most probably will stick to the workforce housing, and if Hispanics are there in those workforce housing, then that for us will be an opportunity. But I'm not sure, I'm being very honest, I'm not sure if we can segregate workforce housing and then Hispanics growth, population growth and participation in this type of housing. Yes, things that we're doing basically is also looking at the management side of the property. So if we know we have a large concentration, or we know we are in a market that will have a large concentration of Hispanics, then we'll try to manage the property in a way that, for example, the property manager or the in-house manager that in the property has to speak Spanish and has to have a knowledge about the Hispanic market and as well then manage the property a little bit different in that way.
Right.
But trying to, at this moment, building or a portfolio, try to build a portfolio of housing for Hispanics, I still feel it's still a little bit challenging because of the demographics and the complexity of the demographic and growth, and the diversity as well of these markets.
Got it. So, I guess my last question is that there was the hurricane that went down into Puerto Rico. So have you been seeing some progress being made within Puerto Rico? And what was the damage on the real estate in Puerto Rico? Okay,
let me ask the last question first. The damage has been substantial in Puerto Rico in terms of real estate, because it depends on how you see real estate. But if you look at whatever is housing as one piece of real estate, that was the most that was damaged here in Puerto Rico with the hurricane winds and the rain. So a lot of housing needs probably will be one area for Puerto Rico for future investments. In the segment of industrial and office building, commercial, etc., the damage wasn't that bad. But of course, since you had a lot of people that were hurt in the housing part, then there is a lot of people then that has moved away from Puerto Rico and they have migrated to the U.S., and that has impacted commercial leasing and then as well as office leasing and warehousing. But still, with all the funds that we're seeing that will come to Puerto Rico, probably that will have a positive effect on those other segments as housing and retail and office. The key question here is to answer is that, as you probably know, the U.S. government has put about $30 billion of funds into Puerto Rico in different categories, and the issue is not how much money The issue is how quickly that money can be deployed. And they have put a lot of restrictions on how that money has to be deployed, very different from Texas with Harvey and Florida with Irma. Funding there was really quick, and it reached then the right points to make the difference. Here, funding is available, but hasn't been released yet, or has been released very slowly. So that's the challenge that we're facing right now on how funding can be distributed in more equitable manner and fashionable manner compared to the states.
So you had mentioned that housing was really hit the hardest. Do you foresee in the future, and it may be years down the road, that your real estate focus and investments would go back into Puerto Rico in some capacity with multifamily there?
Yeah, I foresee something like that. I'm not clear yet on the type of multifamily, because Puerto Rico is not a multifamily market. Here, most of the people own their homes, so probably This situation will force for people to look at another option, and it will force more the multifamily market as an option, and how housing, new projects must be developed to entertain that option. Because right now, most of the projects that you have here are more your type of traditional housing, that are your neighborhoods, traditional neighborhood housing. So you don't have the garden-style apartments, and that now, looking at what we're facing, probably that will change towards that type of focus, and more so into portable housing or portable units or smaller units. Because there's a lot of scarcity of land in Puerto Rico. So if you want to develop a project and you want to maintain your cost low, then portable units will be an option for that into the future. And as more millennials comes into the market and more of the baby boomers move out of the market, that will shift towards that segment of people not owning but more renting apartment units or housing.
Okay, so and then do you foresee looking at your real estate company as part of the allocation of the family's wealth? And if so, how do you view that? Do you view that as part of the income of the family wealth, or what's your your viewpoint on that?
Yeah, at this point, yes, that the real estate will be part of the family wealth and how that family wealth is going to distribute. Right now, we have our next generation. There are 13 of those, and most of them, we have a small group now in college and graduating from college. So we have to develop a portfolio that they have the opportunity, if they come into the business, to manage as well. So at the end of the day, we'll keep our media, as we call our three major areas of investment, which one is media, with all the different things that entails within that media. We have what we call customer engagement. That is, it's for you to know, it's call center, but it's more than call center. It has also database management, mailing and fulfillment, and other services. And then we have the other area of investment that is real estate. So within that real estate, then we'll allocate resources as we feel as the family group, because we have our family council every month, and within the family council, we decide how do we allocate the investment through these three different areas. So yes, real estate will be an integral part for us as a family group to grow further away from the risk in Puerto Rico, but also in Puerto Rico we'll still invest in real estate if we find the right opportunity to.
Got it. Well, Antonio, this has been fantastic, and I think we've got a ton of information here. Let me shut off.